Do you really need a financial advisor, or is it better to save money and figure out your finances on your own? Well, after helping thousands of Kiwis plan how they'll quit work for good, I've learned there are 7 signs that you might not need a financial advisor. And in this episode of the Property Academy podcast, we'll start by looking at what you actually get from a financial advisor and what it costs. And once you learn the 7 reasons you might not need one, then you will finally know if you really do need help with your money or not.
And I think this is a question that's very important. In the past, property investors really haven't had that many financial advisors, not in terms of an investment advisor, right? You know, you might have a mortgage advisor, you might have an insurance advisor, but not somebody helping you specifically on the numbers for property. Now, why do you think that is?
I think part of it is that property investment has kind of been one of those unregulated worlds where people go out and you join an association and people giving advice all the time. There hasn't been as much structure to it as there is today. That's my best guess.
But things have really changed over the last couple of years where now the New Zealand regulators are saying, oh, actually, we're much more interested in property investment. Now, just before we go through, do you actually need a financial advisor or not? It's very important to remember that Andrew and I own a financial advice company. And so you might think we're going to be very biased and say every property investor definitely needs a financial advisor.
They need me.
And actually, you should use Andrew Dickel, but that's not what we're going to say. This is actually going to be an honest review because there are some situations and there are certainly some people who don't need financial advisors, and it's okay to talk about that. So what do property investors actually get if you work with a financial advisor?
Now, there are different types of financial advisors. There's mortgage advisors, there's insurance advisors, investment advisors who do manage funds and shares. But today, we're talking about investment advisors who give advice on property investment and how to build a property portfolio.
And these people might also recommend you properties to invest in and help make sure that you are investing in the right properties for your situation. But what do you actually get if you work with them? Like, what do you get?
Well, the first thing is a written plan, and that's going to talk about what you're going to invest in and should have some numbers and some projections showing how properties might perform to meet your financial goals. And this could be different based on, say, you and I might have different goals and I might want to achieve a passive income now. You might want to build your wealth over time. So it should be tailored to what it is that you're trying to achieve. And hopefully it's a really easy to understand document. Like I've seen financial plans that they become quite overwhelming to understand. But if you've got some nice graphs and projections that show you, what you could expect and what the worst case and the best case might look like, I think those are the kind of useful things to have in a financial plan.
And then often you'll be shown some properties that are recommended to you and that you might decide to invest in. But that won't always be the case. Depends on the financial advisor. And before we go through those 7 signs that you need one or you don't need one, it's important to understand how much financial advisors really cost, because it might cost you nothing all the way through to $10,000 plus GST, depending on the company that you decide to use. So for example, if you come through our company, Opus Partners, the plan is free. Looking at properties or being recommended properties is free. And so you might ask, well, how do you keep the lights on? Well, on one side, we've got a property accounting company, a mortgage company, a property management company. And if we do a really good job helping create that financial plan, you might decide to use some of those companies. And then on top of that, if you decide to buy a property through the Opus group, then we're going to charge the developer a marketing fee. Now, that can create a conflict of interest between you and us, because maybe we and other companies like us just tell you something's a good investment when actually it's really not. Now, that's actually the reason why we split our company in 2. So we've got Opus Partners, which gives you financial advice and works for you. And then we've got Opus Property, which finds the properties, and they actually are serving the developer, right? Because they are real estate agents. And so that's how you know which person is actually working for you. So that's how you manage it. But there are some companies that charge you a fee as well. So for example, if you went to Enable Me and went through their property investment service, according to their website, that can cost up to just under $12,500. If we think about Propeller Property Investments, which is actually closed down now, but they were charging a compliance fee of somewhere between $3,000 to $6,000. Or if we look at Property Apprentice, which is a financial service provider up in Auckland, if you go through their renovation program, that costs on their website, they say less than $10,000 plus GST. So up to
Nine, yeah.
$9,999 plus GST. But if you want financial advice, that costs up to $2,000 plus GST. So I just share that to say there is a range from $0 up to about $12,500. But let's go through those 7 signs that you either do need one or don't need one.
Okay, so the first sign that you might need a financial advisor is that you're starting out in property and you've got less than, say, 6 or 7 properties, especially if you're wanting to get from 0 properties or 1 property to kind of 3 or 4 rental properties, because if you don't have as many properties, you need to make really good decisions at the start so that a bad property or a bad decision doesn't lead you to doesn't hold you back from being able to carry on the trajectory you want to be on.
I suppose whereas a sign that you don't need a financial advisor is if you're already set up and you're already rich. So if we think about Liz Harris, who's got the biggest property portfolio of any female investor in Australasia, she's got over 100 properties,
Amazing.
right? Which is awesome. But she probably doesn't need to sit down with a financial advisor and review her portfolio because she's already very, very sophisticated, right? So if you're Liz Harris, or if you own, it's not like, oh, well, if you've got over 100 properties, then you don't need one. But even if you've got 30 properties, and some people do, or 20 properties, maybe you don't need a financial advisor because you're already very, very sophisticated and you've got a lot of experience. Whereas if you've got 4 or 3, you're less sophisticated compared to somebody who's got 20, 30, 40 properties.
The more experience you have, the less likely you are to screw up, I guess. The less likely you are to make a mistake. But also, if you've got more properties, the more your wealth can tolerate making a mistake as well.
Well, even if I compare you and me, you own lots of properties. Do you have a financial advisor?
No. Well, I am a financial advisor.
Yeah.
But I don't have a separate one.
You don't. But you don't have somebody else. I own 6 properties. I do have a financial advisor because I am earlier. So I feel like I should have a financial advisor, whereas you've got more, you don't have one. The second sign that you might need one, I think, is if you own property, but you don't actually know how you're going to use it to stop working or eventually retire. So I remember talking to an investor once. She actually worked for our team. And she said to me, Ed, I've got 2 investment properties, but how am I going to use these to fund her retirement? And I said, well, if you follow the process we talk about in our book, you'll hold on to these, you'll sell them at some point, you'll take the money, you might invest them in managed funds, you'll gradually draw down on that, and that's how you use it to earn an income off it. But of course, because I'm not a financial advisor, to get the actual projections, you go and talk to someone. Well, that is a perfect example of somebody who probably should have a financial advisor, because if you've got these assets and you're thinking, okay, how am I going to use them to meet my goals? That's the kind of question that a financial advisor really can answer. Even today when we've been recording this, we had an interview with a lady called Joy, and she was like, oh, I'm not really sure what I should do with the properties that I have. Well, that's a really good question, and it's one that a financial advisor will help you answer. And I kind of say to people, if you're thinking at any point throughout this podcast that actually I probably should sit down and talk to an actual person, then I always say you can book a free 1-hour portfolio planning session with our team we've got a team of, I think, 12 property investment advisors. And at the end, you'll actually walk away with a 15-page-ish wealth plan. And if you want to book that free 1-hour session, I'll drop the link down in the description. But if somebody who doesn't know how property is going to fund their retirement should use a financial advisor, I suppose what's the flip side of that?
I guess if someone's already got a game plan in mind, they've got a written down plan, or for example, they're living their plan. So say you're 70 and you've got no mortgage, you've got a couple of rental properties with no mortgage on them, they're earning good cash flow, and you're pretty much happy with that cash flow, then maybe you're okay. Maybe you don't need to do anything different. Sometimes you might refine things. So like I met someone in that situation only a few months ago, but the return that they were getting on the property that they had paid off was just okay. And so they could get much better than that. So they whilst they were comfortable with where they were, they wanted to get as much money as possible and build up a bit of a buffer for their kids. And so we'll go down that path. But if you're happy with your current kind of situation, then maybe don't need a financial advisor.
Well, I think the third sign, just coming off that you need one, is if you're unhappy with your cash flow on your properties. So I remember speaking at a property investment event in New Plymouth. You ditched me.
I did, sorry. But you've ditched me so many times now. Yeah, and you always
that
use
is an
us.
absolute lie. I did that one time when I didn't want to come to Queenstown because I was recently married. And I wanted to stay at home. I did that one time, Andrew. But anyway, I was speaking at New Plymouth by myself, and this investor came up to me and said, Ed, I've got 6 rental properties. I was like, great. She's like, but how do I retire on them? And I was like, okay, what are your numbers? And she said, okay, I've got $5 million worth of property. I've got $2 million worth of mortgages against them. And I've got $3 million of equity. And I said, great, what's your cash flow? She's like, they're just breaking even.
Wow.
And I said, that's very strange. You know, I would expect that you'd get some amount of cash flow off those properties. And in fact, you've got a lot of equity within these. You might be able to restructure in order to get a better cash flow.
Or even sell $2 million worth and pay off the debt.
Assuming that the yield was okay for them. But if she sold down all of it, paid back the debt, and you walked away with $3 million worth of equity or just under, what some investors might do is then go and buy higher yield properties, and you'd probably be able to get an income of about 120 grand off that pre-tax. And she was only looking for about 70 grand. So I said to her, you got to sit down with a financial advisor and work through this. Maybe you can sell down some of your properties, pay off the debt, and just live off the rent of the properties you decide to keep. Maybe you've got to restructure the whole portfolio. But if you're really unhappy with your situation like that, that's a really good sign that you should sit down with a financial advisor. Whereas when might you not need one?
So again, I think it's the same as the last situation. If you're happy with your cash flow, maybe you don't need a financial advisor. If you're not wanting to change anything, just stick to what you're doing.
Well, what's sign number 4 then?
Sign number 4 is if you and your partner are not on the same page. And this happens all the time. So don't feel bad about it. It's just that you probably have different ways of thinking about kind of finances, and that's okay. But if people are not on the same page, i.e. a husband and a wife, like a husband and a wife or whoever you're with, and one person wants to invest and the other person doesn't, often it helps to talk to a third party that's independent of your relationship, and they're going to actually go through what you're wanting to achieve and apply some mathematics to it, because it may very well be that you're actually on the right track and you don't need to take added risk. You don't need to invest. You don't have to sacrifice now. Or it might be that actually you're absolutely nowhere near where you want to be in the future, so you need to take some action now.
I mean, sometimes financial advisors basically act as therapists, being like, you two need to listen to each other. You know, Martha, did you hear what Barry is saying here? He's made a very good point. And you need to hear that.
I like how you're taking Barry's side. That's just typical you.
No, and you, Barry, you need to listen to what Martha said. You know, she wants to take more risk, and, you know, maybe she wants a different lifestyle, wants a better lifestyle. You need to listen to her, Bazza. Whereas if you and your partner are on the same page, I don't mean to say, you know, if you guys are on the same page, don't have a financial advisor at all, but there might not be the same need as if you two are on completely separate pages. Because if you two are on completely separate pages, you're not listening to each other when it comes to money. That's like a red flag. You guys, ding, 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 need to go and talk to a financial advisor. But sign number 5 that you need a financial advisor is if you've been thinking about investing in property or investing forever, but you've just never actually done it. And there are a lot of people who've thought about investing for 10, 20 years, and they've just never actually done it. They've struggled to pull the trigger. And that's where a financial advisor can help you just see through the analysis paralysis, the kind of smoke screen of not knowing what the hell that they're doing, and be like, sweet, this is what you need to do. And they can give you the clarity that you need. Whereas if you can easily pull the trigger, you're happy investing, you don't hesitate, you just go ahead and act, there may be not the same need for a financial advisor right now. And I suppose the sixth and second to last sign that you need a financial advisor is if you really care about seeing the numbers, because some people love seeing those projections. They want to see how many properties they potentially need to buy. What about their KiwiSaver, how that factors into their plan. And I'm like one of those people. I want to see the graphs. I want to see the numbers. I want to understand what do I need to do to get ahead and run different scenarios. But there are some people who do not care about that, right?
Yeah. So if I think about some of the people that I have worked with that have gone and invested, and good on them for investing, but it's been more emotive than it has been about the numbers. So they want to buy a property for a family member to live in, or they want to buy something because they want that to be their house one day. So they've bought something in Tauranga. At that stage, you don't care about the numbers. You're only buying it for a personal reason. That's your motivating factor. And there's nothing wrong with that. If you're on the right financial path and you can afford to do that, good on you. So if you don't care about those numbers as much, then you don't need a financial advisor.
And I think generally in New Zealand, because I don't want to get in trouble with the Financial Markets Authority, which is the regulator of the financial services industry, I think it's fair to say that more Kiwis probably should get financial advice than currently are. But that doesn't mean that every single person needs to go and get financial advice all of the time. There are some signs that it's going to be more valuable for you. And it's not to say, well, if you tick one of these boxes and you need financial advice, well, that means you absolutely don't. And similarly, if you tick one of these boxes where we're like, maybe it's not as valuable, that doesn't mean you absolutely don't need it. You know, you listen to the whole podcast and base your decisions on that. But the seventh sign and the last sign that you probably need a financial advisor is if you need accountability and research. So if you care about having the research to make the best decision possible, then that is, and you don't have the skills or the DIY or the money to spend on all of this research, then that is a sign that you might need a financial advisor. But if you enjoy combing through the rental data and the spreadsheets and looking at the data and doing the research, well, maybe you're not going to get quite as much value out of a financial advisor because they're going to do all of that for you. So, for example, if you think about Sharesies, the app, a lot of people will decide to use a financial advisor even though they could go into Sharesies and it's really easy to invest in a specific fund or buy shares in a specific company. And the reason they might do that, even though they could go and buy the shares in the funds or the units in the fund themselves, is that they don't know what they should be investing in. Or they think, well, I don't know when's the right time to buy a share in Ryman Healthcare or Coca-Cola.
Or things like dollar cost averaging, things that you might want to think about, or a fund manager or an advisor is going to say, hey, what about this? Let's not put all your money in all at once or whatever.
And that's where it can be quite useful to use a financial advisor. Whereas if we think about property and you think, well, no, I don't need anybody to show me the data because I'm really good at it. I don't need somebody to keep me on track. Well, that's where what a financial advisor does is going to be less valuable to you because you don't value it.
It's funny though, like we have spoken about that research not so long ago. I think it was from Stanford, where they had two sets of people, some that used financial advisors, some that didn't.
It definitely wasn't Stanford.
Where
I think
was
it was. I think it was the Royal Bank of Canada from memory.
Same thing. And just edit that out, David. And the people who use financial advisors were so much significantly more wealthy as a result. So I kind of also think, as a bonus round, if you just want to make more money, use a financial advisor.
Yeah, so the stat was that they took two groups of people and some of them had financial advisors and some of them decided not to. And what ended up happening is the group of people, after 15 years, the group of people who had used financial advisors had 3.9 times the money as the people who didn't use financial advisors. Now, that was after adjusting for income, right? So it's not just that rich people were more likely to use financial advisors. Using financial advisors ended up with them having more wealth. Now, it's not necessarily that the financial advisors got much, much higher returns, but it's because the people who use financial advisors tend to invest more frequently and prioritize investing. And so, yeah, if you want to end up wealthier, that might be something you consider as well. And if you want to get some free financial advice, I'll drop a link down in the description where you can book a meeting with our team.
So now you know that not everyone needs a financial advisor, but if you do get one and decide to invest, you really need to know that it doesn't make investing risk-free. So before you invest in property, there are 6 brutal truths that every investor needs to hear, but most simply ignore. So before you invest in property, watch this video next.